Swayam Prabha. Digital India. Educated India.
Good afternoon, dear students. Today in this particular module, today in this particular lecture, we will be discussing the origin and growth of commercial banks in India. And we will also be discussing the changing role of commercial banks in India. So we will be discussing that. First of all, you should know, I have already told you that what is a bank. So you should also keep in mind that banking is very old as far as our country is concerned. It is very old. It is there since ages. But in the modern form, you may say modern banking originated in the last few decades of the 18th century. Otherwise, we all know that banks are there, and banking started from the bank. The word bank itself has been taken from the word bankers, or some sort of bench used to be there in other countries, and some counting of money used to be there. So that is there. That is the thing behind origin of the banking. But as far as India is concerned, and moreover as far as modern banking in India is concerned, it definitely originated in the last few decades of the 18th century. So it should be kept in mind. And earlier, no central agency, no regulator. So earlier, no such regulator, no regulator at you may say national level used to be there. So for various years, for a number of years, banks were acting as quasi-central banks also. So it should be kept in mind. And various banks were established. And I will be discussing regarding that one by one. But the major thing is that SBI basically originated from Imperial Bank of India. That itself originated from three presidency banks. I will be discussing in detail also. Then various other banks like Allahabad Bank was there. Awadh Commercial Bank was there. It was created. It was established in Faizabad in 1881. PNB was established in Lahore in 1894. And ultimately, I have already told you that Imperial Bank of India was created by merging all the three presidency banks. That is Bank of Bengal, Bank of Bombay, and Bank of Madras. And then in 1934, the landmark decision was taken to establish RBI. And from 1st of April 1935, RBI started functioning as the Central Bank of India, as the central bank of our country. So it should be kept in mind. RBI Act is 1934, but RBI as such started functioning from, you may say, April 1st, 1935, and it was nationalized in 1949. So let us discuss in detail. So first of all, the first bank that was established in India, it was long back in 1770. It was created. It was, you may say, established in India, and it was a Bank of Hindustan. It was created by Alexander and Company. So it was the first bank. In the history, it has been mentioned that the Bank of Hindustan was the first Bank of India, and it was established in 1770 by Alexander and Company. But it is not there nowadays. Long back, it was liquidated during 1829 to 32. So it is not there at present. Then second bank. As far as second bank is concerned, that is General Bank of India. It was created in 1786. It was established in 1786, and it was also liquidated. It couldn't, you may say, couldn't exist for a long time. It was liquidated very early. After almost 5 years, in 1791, it was liquidated. But it is the second bank as far as Indian banking system is concerned. Then after that, what happened? After that, three presidency banks were established. Bank of Bengal was established in 1809. Earlier, it was known as Bank of Calcutta. But after that, then in 1840, Bank of Bombay was established. After that, in 1843, Bank of Madras was established. You see, these are there in order to cater different directions, the different, you may say, areas of the country. So these three banks used to be there, and the business of East India Company and the business of, you may say, Britishers, that was taken care of by these banks. Actually, you should know that in India, various things happened, various developments took place only because of Britishers. Only as we were the colony of Britishers, so various developments they made for their own benefit, for their own advantage. Various examples are there, like you may see, it may be telecom, it may be railway line, or it may even be the banking sector. So these were established in order to help them, in order to assist them, as banking is the main aids to trade. So it was established, and it was very much needed in order to conduct business in an effective, in an efficient way. So that should be seen. And after that, you see number of banks were established. It is very much clear from the screen. In 1865, Allahabad Bank was established. In 1894, PNB, that is Punjab National Bank, was established, and it is still there. Its headquarters was at Lahore. And then in 1906, Bank of India, Canara Bank, and corporation banks were established. And now you will see that various banks like Corporation Bank, that is not there, and that has merged with some other bank, basically Union Bank of India. Then in 1907, Indian Bank was established. 1908, Bank of Baroda and Punjab and Sindh Bank were established. In 1911, Central Bank of India, 1919, Union Bank of India was established. 1923, Andhra Bank was established, but that is not there nowadays. Now, even Andhra Bank has merged with the Union Bank of India as Corporation Bank. Similarly, Syndicate Bank was established in 1925. Vijaya Bank was established in 1931. Indian Overseas Bank in 1937. Dena Bank in 1938. In 1943, OBC and UCO Bank were established, and in 1950, the United Bank of India was established, and in 1955, State Bank of India was established. But I would again like to say that in 1921, Imperial Bank of India was created by merging all the three presidency banks: Bank of Bengal, Bank of Bombay, and Bank of Madras. By merging all these, Imperial Bank of India was created, and in 1955, it was made SBI. SBI was created, and you may say Imperial Bank of India led to SBI. And in 1960, various other associate SBI banks, they were associate banks were merged. They were SBI was directed to deal with that, and they were. But in very recently, again these were merged, and now we are having SBI only. We are not having any other associate bank like State Bank of Patiala, State Bank of Hyderabad, State Bank of Travancore, State Bank of Bikaner and Jaipur. Now it is not there. Imperial Bank of India was nationalized in 1955, and SBI was created. And the landmark decision in the banking history, that was to create RBI on the recommendations of Hilton Young Commission, and RBI started functioning from 1st of April in 1935, and it was created as per the provisions of RBI Act 1934, and the entire thing happened due to the recommendations of Hilton Young Commission. So that was the brief history of Indian banking system. Now, after that, what happened in 1969? it was felt that public sector banks are not performing their duties in the true sense. Various sections in the society were neglected. The banks were basically catering to the needs of big industrial houses and all that. And as far as small industries, as far as agriculture sector is concerned, they are not looking after, they are not very much concerned about that. So that is why, in order to achieve the social objectives of Indian planning, like catering to the needs of the poor section, like promoting social banking, so Government of India nationalized 14 banks in 1969, and again in 1986 more banks were nationalized. Now, what is nationalization? Nationalization means taking when government takes control of some entity, some business house, some company. So that is known as nationalization. But now the trend is the opposite. Now the government is concerned with privatization. Government is even promoting privatization. But at that time, it was not that. It was to nationalize. So various banks were nationalized. So it should be kept in mind that various banks that were nationalized in 1969, earlier they used to be in the private sector only. And what was said by our ex-Prime Minister Shrimati Indira Gandhi on the nationalization of banks, she said the purpose of nationalization is to promote rapid growth in agriculture, small industries and export, to encourage new entrepreneurs and to develop all backward areas. So for this, the government felt that various banks are not taking sincere steps, they are not making sincere efforts in this context. So there is a need to develop, in order to develop agriculture, in order to develop small scale industries, in order to achieve the social objectives. Social objectives, it was felt that the government should nationalize the banks, and government nationalized 14 banks in 1969 and 6 banks in 1980. Now, again, I am telling in detail what were the main reasons why nationalization was there. So, I will be explaining these points in brief one by one. First is priority sector lending. You see, various sectors are there, but out of those, like MSME, like you may say small industries, you may say, then agriculture, these are the sectors that government wants to keep under priority sector. Some percentage is fixed, and government wants that at least this percentage should be given to this sector only, in order to promote, in order to develop India. So for priority sector lending, to make it a success, to make it a reality, it was there that nationalization of banks was there. So, in order to develop rural areas, in order to develop backward areas, nationalization was done. As other banks, they were basically tackling, they were basically satisfying the needs of the urban population, urban India, and they were. It was felt by the government that they are basically neglecting the rural areas and backward areas. But our aim is to develop each and every area. So balanced regional growth is our motto from the very beginning. So in order to develop these areas, these unbanked areas, these backward areas, a government took control of the banking sector, that is 14 major banks. Then in order to increase the efficiency, it was felt that once these banks are under the control of the government, then the efficiency of the workers, efficiency of these banks will be increased. So in order to increase the efficiency, nationalization was there. In order to develop banking habits amongst the masses, in order to popularize banking, in order to develop banking habits, in order to inculcate banking habits, government thought that nationalization was necessary. And once bank is there in every area, bank is there in unbanked area, rural area, backward area, so it will be ultimately promoting the banking habits of the people. And then it was felt that when government will be controlling the banks will be serving large masses, and they will be saved from the clutches of the money lenders. As in, they will not be getting loans from money lenders, rather they will be moving to the banks for their financial needs. And then it was felt that when government will be taking banks under its control, so it will lead to increase in employment. In private sector, it might be there that persons, that staff is overburdened. But when government will be taking care of the staff, when nationalization is there, when banks are under the control of the government, then employment will increase. Every vacant post will be filled, and automatically the burden on the staff will be reduced, and it will lead to a satisfaction. Then uniform development of all areas. I have already mentioned that government wants a development of each and every state, each and every area, and it wants balanced regional growth. So, in order to achieve this objective, in order to have balanced regional growth, government did nationalization of banks in 1969. Now, what are the banks that were nationalized in 1969? I have already told you that 14 banks were nationalized in 1969, and these are Allahabad Bank, Bank of Baroda, Bank of India, Bank of Maharashtra, Canara Bank, Central Bank of India, Syndicate Bank, UCO Bank, United Bank of India, Union Bank, Punjab National Bank, Indian Overseas Bank, Indian Bank, and Dena Bank. So these were nationalized in 1969. Then the second phase of nationalization was there in 1980. So at that particular point of time, six banks were nationalized. Six banks were taken over by the government of India. And these banks are Andhra Bank, Corporation Bank, Punjab and Sindh Bank, Vijay Bank, Oriental Bank of Commerce, and then New Bank of India. So after that, in 1991, actually new economic policy was announced under the dynamic leadership of then Prime Minister Shri P.V. Narasimha Rao, and Dr. Manmohan Singh was Finance Minister at that particular point of time. So under their able guidance, liberalization, privatization, and globalization, that was there in India as a result of new economic policy. So in 1991, various new banks were allowed to enter. Various private sector banks, basically 10 private sector banks, entered the banking sector in India, and these are ICICI Bank, HDFC, UTI, that is Axis Bank. Earlier it used to be UTI Bank, IDBI Bank, IndusInd Bank, DCB, Times Bank. Then after that, it merged with HDFC. Global Trust Bank, it merged with OBC. Bank of Punjab, it merged with Centurion Bank, and then Centurion Bank used to be there. It merged with HDFC. So you may say that Bank of Punjab, Centurion Bank, these were the main banks, and these merged with HDFC Bank. So these establishment of private banks took place in 1991. And after that, a few years, you may say, after that, then again these banks were created. Kotak Mahindra Bank was there, Yes Bank was there, then IDFC, Bandhan Bank, and Indian Post Payment Bank. These were created. Then the wave of merger started in public sector banks in India, and nowadays OBC, Oriental Bank of Commerce, and United Bank of India, they merged with PNB. Syndicate Bank merged with Canara Bank. Allahabad Bank merged with Indian Bank. Similarly, Andhra Bank and Corporation Bank, I have already told you, these banks merged with the Union Bank of India. Dena Bank and Vijaya Bank, they merged with Bank of Baroda. And all the associates of SBI, like State Bank of Bikaner and Jaipur, State Bank of Hyderabad, State Bank of Mysore, State Bank of Patiala, State Bank of Travancore, and Bharatiya Mahila Bank also, they basically merged with State Bank of India. So now this is the latest scenario. And after that, you should also be aware. I have already told you while discussing the types of banks in the previous video, that then small banks, payment banks, these have also emerged, and they are also there nowadays. Now, as far as changing role of commercial banks is concerned, let me discuss with you that. First is digitalization. The modern era is the era of digitalization. Digitalization has affected each and every sector of the economy, and banking is not an exception. So, as a result of various efforts, as a result of IT orientation, you will find that various new things are there in the banking sector. Now we are having NEFT, we are having RTGS. So earlier these were not there. So banking sector has, you may say, banking sector has really changed as a result of digitalization. Then consolidation is there, strategic alliances are there. I have just mentioned that various banks have merged, like Bank of Punjab, like Centurion Bank, they merged with HDFC Bank, and various other things you might have noticed. And now the modern era is the era of consolidation. Earlier, number of banks used to be there. Earlier, various associate banks of SBI used to be there, but now there is single SBI. SBI, State Bank of Patiala, State Bank of Hyderabad, they are no more. Merger is has taken place, strategic alliance consolidation is there, and then banks are making various types of strategic alliances with other parties also. You see now various innovative products are being introduced in the market, and it is not so that these innovative products are introduced only by the private sector banks. No doubt, various good private sector banks are there, and they are performing very well. HDFC Bank is performing very well. Axis Bank is performing very well. Similarly, ICICI Bank, Kotak Bank, these are the banks which have created a place for themselves. They are very good banks. They are very creative. They are introducing innovative products in the market. So, but it is not so that only private sector banks are introducing innovative products. Even various government banks like Bank of Baroda, even SBI, these are also introducing innovative products in the market, and it is the need of the hour also. In order to survive, in order to grow in this competitive world, it is very necessary that you are working in a creative manner, you are developing new and innovative products. Then NPAs and corporate debt restructuring. You see, NPA, that is non-performing assets, that has created a big issue, that has created a big problem for the banking sector in India. And government is no doubt, government is helping a lot, you must say. And corporate debt structuring is being done at the central level. So banks are able to now control, now reduce their NPAs, but still NPA level is very high. And as far as public sector banks are concerned, due to various compulsions, their NPAs have increased too much. Then more customer focus and relationship banking. It is not so that earlier customers were ignored, but nowadays, due to various, you may say, legal compulsions also, and due to competitive pressures also, and due to various other factors also, nowadays every bank, be it in the public sector or it is in the private sector, uh, they are they are treating customer as the king. So nowadays more customer focus is there, and relationship banking is there. It is being practiced, and it is very good. Customers are feeling blessed, and ultimately it will be helping the banking sector only. Then re-evaluation of commercial portfolios. Earlier it was not done. Earlier it was taken for granted. But nowadays, in the era of competition, in the era of cutthroat competition, you may say, so commercial portfolios are being re-evaluated, and necessary changes, necessary modifications, necessary adjustments are being made in these commercial portfolios. Then effective risk management. Risk management is being practiced in an effective way, in an efficient manner, and various techniques are used. Help from the professionals is being taken, and their suggestions are being incorporated in order to deal with the risk, in order to manage the risk in a proper way. Now, various value added services. Earlier, banks were limiting their transactions to just accepting the money from the public, and then lending the money to the public. But nowadays, in addition to those core activities, Number of value added services are being offered by the banks, and everybody is happy, be it ATM card, be it credit card, debit card, be it any other type of online service, mobile banking, SMS banking, various types of services, internet banking, you may say. These are being given by the banks, and public is really very much satisfied, and they are very happy regarding that. Intense competition. I have mentioned various times that competition is there in the Indian banking sector. Public sector banks are there. Intense competition is there. Private sector banks are there. Again, great competition is there. And nowadays, foreign banks are also operating in India. So again, Citibank is there, and various other banks are there. So HSBC, Hong Kong and Shanghai Banking Corporation is there, and so they are basically offering their services in a great manner, in a wonderful way. They are performing their banking activities. So as a result, in order to survive, in order to grow, everybody will have to change its style of functioning. And the competition, the entry of foreign banks, the entry of private sector banks, it has really changed the way in which the public sector banks used to function in India. And but nowadays, banking sector is concerned with promoting entrepreneurial spirit. So government is various plans are there, Startup India and all that, and government is particularly concerned with MSMEs. The limit of MSMEs has also been changed in the recent past. So government wants people, government wants even students to be job provider and not job seekers. So it has also increased manifold the responsibility, the duty of the banking sector. And then effective corporate governance. A number of issues were there in various banks in India, like Yes Bank issue is there. So in order to curb that, effective corporate governance measures are being introduced in the banking sector. So that was all regarding changing role of commercial banks in India. So at the end, I would like to mention that the competition and various other things, our banking sector has gained a lot from such happenings. And nowadays, various public sector banks in India, they are having their branches in the other countries. They are having overseas branches. SBI may be there, Bank of Baroda may be mentioned. They are having various overseas branches, and they are performing well. So, dear students, that was all from my side as far as origin and growth of commercial banking in India is concerned. And I have also discussed in brief the changing role of commercial banks in India. Okay, then, thank you.